Hi, this is Suzanne Long, Professor of Accounting at Jackson College. Our next step is closing, the closing process. And to start, we're going to look at the closing entries, posting the closing entries, and the post-closing trial balance. There will be one more piece to go along with this, and that's the official financial statements. So let's look at our accounting cycle. So we've got step 1 through step 4. That's really the first part. Getting from analyzing, journalizing, posting to adjusted trial balance, and you want to stop there. Make sure you're in balance, make sure things are okay. So that's the first time around. And then the second piece is right here with adjusting entries. Preparing the adjusting entries, posting those entries to the ledger, and preparing the adjusted trial balance, and you would stop right here. Make sure you're in balance, make sure everything's okay. And now we're looking at the last lap, the last section of this cycle, and that's the closing process. So here we've got journalizing and posting the closing entries and the post-closing trial balance, and then you would have your official hard stop at the end of the whole thing. In here you see prepare the financial statements, and I'm going to save that for a separate video. And you can do your financial statements anytime after you've got your adjusted final totals. So anywhere in here you could do your financial statements. So I'm going to keep going with our process of journalized post and trial balance. This is the third time through. Here we've got journalized post, unadjusted trial balance, journalized post, adjusted trial balance, and now we've got journalized post and post-closing trial balance. So let me make this really small so you can kind of see everything that we're going to be doing. This is where we've been. This is the worksheet that we've already completed. These are the closing entries that we're going to prepare right now. And this is the ledger. And so we're going to be filling in the ledger with our closing entries. And then we'll have our post-closing trial balance. Just kind of scanning some things. I noticed this was in yellow. So yeah, we're going to have a J3 for closing entries. All right, things are looking good. So I think I've mentioned these are my homemade, homegrown files. So yeah, you never know what could happen here. I'm constantly finding things. Okay, so here's our note for today. Yeah, closing process. And here's where we've been. The worksheet on adjusted, adjustments, adjusted trial balance. So this is kind of where we're at now. Adjusted trial balance, and then closing entries, and then post-closing trial balance. And let's see what we're told in the problem. So you always want to read the problem and see what you got there. So this was Catherine Gordon, CG Accounting, Accounting and Bookkeeping Business. There's a little bit of note here about, yep, we've been working on this problem for a while. Yep. Notice this little blurb here about some reminders about owner's equity. Owner's equity was $6,400. Owner contributed $3,000 in cash. Owner withdrew $1,000 for, that should say, personal use. Assume that $800 of note payable must be paid. That's interesting to me. I don't get this right yet. I want to check capital and notes payable based on this little note right here. And then here's our instructions. And like you see in order here, this is the AME learning. Picture the accounting cycle, and this is their problem. Prepare the income statement, statement of owner's equity, classified balance sheet, financial statements. And here's where we're going to start, closing entries and posting, and post-closing trial balance. Okay, so this blurb got me thinking about capital. So I'm going to come over here, and I want to look at capital and notes payable. So here's notes payable, and yes, there was a payment on notes payable, so okay. And here's capital, beginning balance, owner contribution, and here's owner withdrawals, So that note over here was really just kind of a rehash or a reminder. Yep, these are some things that have happened this month with owner's equity. Here, I just caught another little one. Okay, so let's get busy with the closing entries. So that'll be good right about there. I'd like to have this worksheet to my left so I can see what I'm doing with accounts. And then right here is where we're going to build our closing entries. And if you recall, it said we're using the income summary method. There are two methods for closing entries. We're going to focus on the income summary method. That's the method that you'll see in this class for all of our problems. There is another way to do it that's just a hair shorter, and it goes directly into the capital account or directly into the retained earnings account. So in like future classes with me, we'll do some of that. But for now, income summary method for closing entries. So good news, bad news. Good news, there are 4 closing entries. Bad news, it's new. You haven't done this before, so we're going to be sorting this out. Closing happens at the end of the month. So we're going to have that end of the month kind of date, right? And do I want to number them? I'm going to say no. I think it's going to really pop and be visual. You're going to see 4 entries. I think you'll be good. The first journal entry is to close the revenue accounts. So I'm going to put that right here. Close all revenue accounts. And I think I had that in italics before. Yeah, let's do it like that. So I'm going to go and look for revenue accounts. And there's 1. So this company, this problem, it's a new business. We only have 1 account and it's service revenue. If we had more, if we had a few different kinds of revenue, maybe some interest revenue, different classifications of service revenue, however many we've got, we got to close them all out. And I see there's a credit to revenue. So to close revenue, I need to do the opposite, or close it. So service revenue was a credit. I am going to make it a debit to close it out. So I see credit here and a debit here to zero it out. My offset is called income summary. Income summary is a pass-through account. It will never have a balance. You will see through the closing process and in the ledger next, you're going to see it zero out. We use it to support the closing entries, and then it's gone. It's going to wipe itself out. It's a temporary pass-through account. PR, posting reference. I'm posting from these accounts. I'm going to need my account numbers. Service revenue is account 400. Income summary is account 315. That is the first closing entry. Let's move on to the second one. The next closing entry is to close the expense accounts. And we've got 1, 2, 3, 4, 5 expense accounts. 2, 3, 4, 5. Close all expense accounts. So let's look at the first one. Advertising expense, and it's a debit. It should be a debit. It's an expense account, so debit $450 for advertising. I would like to credit. I want to credit all of these. I want to wipe them all out. Now, it just occurred to me that I don't want to type all this. So what happens if I just copy and paste this over here? And what happens if I copy and paste this over here? This might not work because I've got, I might have formulas in there. Yeah, let's see what happens. Those are debits, so I want to credit. Yeah, it didn't work. I was thinking those were formulas. But I could do cell reference equals this one, and then I could do a fill handle. So are there ways to not type all of that in? Yes, absolutely. These are credits, so I'm going to indent, and they were coming from blue to gray, but I'm going to make them gray. So these expense accounts are all sitting here as proper debit balance expense accounts. Yep. And now I'm crediting those expense accounts to close them out. The debit right here is going to be income summary. And I'm going to copy and paste it and with the indentation. So I'm closing revenue, I'm closing expense. You big picture thinkers out there, just hold on, because as we get through this, I'm going to talk about why we're doing it and how it all fits together. Let's finish off this journal entry. Every journal entry has to balance. Your left and your right side has to balance. So right now I have nothing on the left side, and I've got all this stuff on the right side. So I need the total. I'm going to do an auto sum. I need the total of those right side accounts to balance. So now I've got 1575 on the left and I've got 1575 on the right. I'm in balance. So the rules of journal entries, you have to have a date, you have to have debit and credit account, as many as you need to get the transaction done, debit and credit amounts, and you have to balance out. Your left and your right have to equal. All right, let's do the third closing entry. Third of 4. The third closing entry, hang on a second, there we go, is to close net in, no, that's not what I want. Close net income to capital. That's what I want. So capital increases by the amount of net income. We've seen this in the statement of owner's equity, and we're going to see it right here. So how much is net income and what's happening to capital? So revenue minus expense is net income. So we can calculate it real quick right off of our closing entries. 4950 subtract 1575. We've got more revenue than expense, so we're going to have a net income. That means capital is going up. So right here I've got Gordon Capital. Oh, hey, I'm going to show you another way to copy. I want to increase capital. Increase capital. I have a net income. That's going to have a positive increasing effect on capital. Instead of doing a copy-paste blue to gray, I'm going to come up here to the formula line, and I'm going to do a copy. Click here, but come back up to the formula line. That will like insert it into that cell. That's another way you can copy and paste. And then right here, I need income summary again. Now, how much? Income, net income. So I want, now you can do this either way. I'm going to do it this way. I'll do it in the debit. This minus this, net income, and then a cell reference. Now our textbook will say close the income summary account. I don't like that as much, but it's true. On the one hand, we're closing net income into capital. I really want you to think about that. That's the heart. That's why we're doing this third closing entry. We're calculating how much is net income or loss. It's a net income. Net income has a positive effect on capital. That's why we're doing this entry. That also means that the income summary account will close out. So let's do a little timeout. We've got income summary credit, $49.50, income summary debit for the difference. So of course that zeroes out. So I really like this description, close net income to capital, but I will admit that this is also happening too. But I think this is a much stronger, more meaningful description than just this one. All right, last and final closing entry. Close owner withdrawals. So whatever we've got in there, we're going to close it out. Gordon withdrawals, we had $1,000. Yep, I remember that. And withdrawals are a debit. Yep, withdrawals and expenses kind of feel the same. Yep, left side, debit side. So we need to close it out. Right now it's a debit, so I need to credit withdrawals. You could, excuse me, you could type Gordon, comma, withdrawals. You could copy blue to gray, Gordon withdrawals. I'm going to do that thing where I'm up here in the formula line, copying within the cell. So Gordon withdrawals was a debit, and I need to credit it. Close it out, do the opposite. This is not income summary. This is capital. Owner withdrawals have a negative effect on capital. We see this on the statement of owner's equity. So when the owner takes money out, that ultimately has a negative effect on their capital balance. So in the statement of owner's equity, we see equals beginning plus owner contributions plus net income subtract owner withdrawals. So we're making it happen right here. We could even say close owner withdrawals to capital. They affect capital. Net income makes capital go up, credit capital. Owner withdrawals make capital go down, debit capital. And those are the 4 closing entries. Okay, why the heck do we do this? This process that you're seeing in front of you with the closing entries is how the capital account is updated at the end of the month for the activity that month. So we want net income closed to capital. This is how you do it. Close out revenue, close out expense, get net income recorded into capital. Withdrawals have a negative effect on capital, so we've got to get rid of withdrawals. We've got to show a decrease in capital. As far as notes go, you know, my habit is to put some notes over here on the side. Closing. There are temporary accounts that get closed and permanent accounts that don't get closed. Temporary accounts. Permanent accounts get closed. Don't get closed. Temporary, yeah. Temporary accounts. Temporary accounts are revenue, expense, and withdrawals. Permanent accounts are assets. I better not just stop at ASS. Liabilities and equity. So remember, we've got 6 kinds of accounts. You could think of that 6 T's sheet out. I hope you have your 6 T's sheet out right out in front of you right now. These are the temporary ones. These are the permanent ones. Temporary ones get closed. Revenue and expense convert into net income and become capital. Withdrawals becomes part of capital. Assets and liabilities, equity, those are all permanent. So, you know, at the end of June 30 going into July 1st, those balances carry forward. Whatever you've got in cash at the end of June becomes the beginning of July. Whatever you've got in capital, June 30 becomes capital July 1st, that kind of thing. I don't think I want to say anything more about that. You'll see those words, temporary, permanent. It has to do with the closing process. What I'd really want you to focus on or think about as far as the meaning is revenue and expense, net income converts to capital, withdrawal converts to capital, part of closing, gets closed, doesn't get closed, part of the closing process, not part of the closing process. All right, so we looked at where we were. We found our revenue, we found our expenses, we found our withdrawals, and we took care of our 4 closing entries. So the next step is to post those closing entries. So we've got complete the closing entries, and then we've got post the closing entries. And this kind of looks like, hey, isn't this ledger already done? It looks pretty complete, right? Well, no. These closing entries have not been posted yet, so we still have to finish these 4 journal entries. So here we've got service revenue income summary, $49.50, and go. $49.50. I think I might have copied in the wrong. Hang on a second. Be right back. Okay, I'm back. Let's start over again with posting. I did not copy in the right ledger. I want you to have the ledger after adjusting entries. So we're good to go now. Okay, service revenue, income summary, $49.50. Service revenue. So here's service revenue, and we're going to be right here. Ooh, and I see an issue right there, $49.50. And I don't know if that's a copying in wrong thing or what, but this should be $49.50. This should be $49.50. So if I click on this one, I see, well, let's just fix it. It's going to be this plus this. This should be $49.50. And so now I'm going to have equals this minus this, or 0. And when you have a 0 in Excel, it will convert it to a dash. Now I'm going to try typing a 0. Type 0, enter. It converts it to a dash. Still a credit. It's a credit balance account. Still end of the month, but this is going to be closing. And this is going to be J3. So we'll use J1 for the during the month, regular June transactions. J2 is for adjustments, and J3 is for closing. And here you're going to see J3 right there. Page 3, journal. All right, income summary, credit. It's not here. One moment, please. Okay, now we got an income summary account. June 30, closing entry. I would like that to be left justified. We're coming from J3 for the closing entries, and this was closing revenue. So we're going to be right here. Now that puts me on the credit side, so I'm going to go ahead and make this be a credit, since I started with a credit. Okay, let's go back up to closing entries. I posted service revenue. I posted income summary. I'm going to make those red just so they stick out a little bit. So yeah, homemade file. You're seeing all the fun with a homemade file. All right, expenses. So I need to close out all 5 expenses. They're going to show up as debit balances, and I need to record these credits to close them out. And then I'm going to finish up with income summary. Let's go down and find those expense accounts. They're down here in yellow, 1, 2, 3, 4, 5, and they all need to be closed out. So I'm going to do it all, in one shot down here. End of the month, we're closing. I'm going to call this closing entry. J3 for closing, and how much, and a 0, and a DR. Blue is coming through from a previous problem. Let's make that black. Alright, so I can copy this down. All of them are going to be closed out. This one's going to be 100. 0. Insurance, another 100. 0. 25 for interest, 0. And 900 for rent. And these are all going to be DRs. These are all expense accounts. They all end up with a 0 debit balance. Okay, that takes care of credit, 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 credit. All those credits in that closing entry right here. Credit, 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 credit. Those are all posted. Now I need to post debit income summary. This is a closing entry. Oh, let me get all 3. And now I'm coming down. So I've got a credit, and now I've got a debit. I'm going to have a smaller number. Equals credit, reduced by the debit. So I'm down to $33.75. And I'm just going to go ahead and make this all black just in case. So there's my debit, $15.75. Okay, so the second closing entry is posted. All right, let's take care of this third one, income summary and capital for net income. Let's just do it in order. Income summary debit, $33.75. This is closing entry. And now I can finish it off. Equals $33.75 minus $33.75 is going to be a 0. And that was an effect on capital. Oh, I don't have a space for capital. I'm going to insert a row. I'm going to copy and paste that down. That'll just give me a nice spot for formatting. Okay, so now I've got a space for capital. Closing entry. And this is an increase, 3375, net income, increase capital. So I've got credit plus a credit is going to make a bigger credit. Equals this one plus this one. This needs more space. I'll just go ahead and make this space while I'm here. We're going to have another closing entry effect right here. Okay, so that's where we're at right now. Credit. So we've got $33.75, $33.75. So this one is all good. And the last one, capital withdrawals, 1,000. Capital is being reduced by 1,000. Withdrawals is being reduced by 1,000. Closing entries. So we've got credit reduced by a debit. So this is going to be a smaller number. This one minus this one. Here we've got 1,000, 1,000, so we're zeroing out. Yep, because that one gets closed out. And I'd like that to be black. And I don't know what's going on here. It just popped up a different font size. Okay, so we've got closing 1,000, closing 1,000. So that takes care of posting the fourth closing entry. So, well, let me scroll up. Yeah, complete the closing entries. Yep, we did that. We've got our 4 entries put together over here. Post closing entries to the general ledger, and we've got that here. And I want to pause for a second on this whole posting thing. And I want to look at our ending balances. Notice that cash, account, we didn't change any of that stuff. They're permanent balances. No, we didn't change those, and we shouldn't change those. But we get down here to capital and we see lots of activity. That was our balance before, at the beginning of the month, and then we had an owner contribution. We've got net income. We've got an owner withdrawal. So we've got, a couple of changes to the capital account. That 11,775, I'm going to highlight that. We're going to see that number in a few places, and that will become a very important kind of reconciling number or a touch point number. Withdrawals should zero out, closing. Income summary should zero out, closing. Revenue and expense should zero out, zero out, zero out for closing. So when I'm grading, when I'm looking at your work, I'll come right down to capital and see what's going on here. And then from withdrawals on down should all be zeroed out. I should see all those closing entries in there. Then, you want to keep your eye on this column too, just to make sure you're straight. Which ones are debits, which ones are credits. Okay, so we're good with posting. The last piece to do is the post-closing trial balance. We're going to have our accounts from here, the ones that are permanent and have not been closed, are going to show up here. Maybe we could add that to this. Oop, come back. Permanent accounts on the post-closing trial balance. And not on the post-closing trial balance because they got closed out. They're gone. Now, right here, I'm not a big fan of typing. So from here here to here, those are the permanent accounts, assets, liabilities, equity. From here down, withdrawals, revenue, expense, those are all closed. They're gone. They're all zero balance, so they don't show up. But from here to here, copy, paste, and gray, bam. I don't need to type those in. Don't type those in. Okay. Now we need ending balances. So for cash, again, I highly recommend a cell reference. Equals, click, enter. Equals, click, enter. And so forth. Let's get all these balances in here, and we'll see where we're at. Accumulated, where are you? And shifting to liabilities, interest, unearned, note payable, and that beautiful ending capital amount. Oops, I had auto sums already in there. Let's go through how to do those though. So I did cell references to get my balances in there, and then an auto sum. Click where you want it, click the auto sum button. Ooh, it's highlighting. It's saying, hey, do you wanna add those up? And I'm just gonna say yes, enter. Click where you want it, click auto sum button. It's saying, do you want those? And I'm just gonna say yes, enter. So yep, we're in balance. Whew, good. If we're not in balance, remember to always check human error first. Check for typos, check for flipping numbers around, 1, 2, 0, 0 instead of 2, 1, 0, 0, etc. And then if you need to, go back through and check everything. Printing helps. Using two screens helps for checking out errors. So there's our post-closing trial balance. To go back through, we picked up with the adjusted trial balance here. This is where we were before, and we're adding in closing entries. We're posting our closing entries to the general ledger, and in particular, you see that right in this area. This is like your, oh, geez, come back. This is like the hot spot right here with capital. You're seeing all this activity with closing. And then revenue and expense zeroed out. So there's us posting closing to the general ledger. And then here's us finishing off the post-closing trial balance with those permanent accounts and those permanent carry forward balances. And then these balances will take us from June 30th to July 1st, and we'll start the whole thing all over again for July. All right, very nice. Good work.